perform due diligence prior to entering into any loan agreement? Does your bank provide full disclosure of credit information to enable you to make an informed credit decision? And did you know of the existence of a one-stop platform, the Total Cost of Credit, where you can compare the cost of loans across all the banks? Tonight on The Scorecard, we focus on the cost of credit in Kenya and unpack the numbers for you. Hello there and welcome. I'm O'Brien Kimani. Shortly, I will introduce our guest to the studio. Is the loan application process in Kenya friendly? And that is our question for tonight. As you have noticed, my co-host Marie Yambo is not around. She is out of town for official assignment. But you know for sure that I am up to the task. Welcome wherever you're watching us from. Remember, you can engage with us wherever you are. At O'Brien Kimani is my Twitter handle. At KBC Channel 1 is our Twitter handle. Remember, we're also on Facebook. And KBC TV, KBC Channel 1 TV is our Facebook page. And of course, on Instagram, we are KBC Channel 1. I want to retake the question again. Do you think, let me retake this question again. The question is on the screen. Is the loan application process in Kenya friendly? That is the question. Well, we want you to share with us your thoughts and insight on that question, because at some point I will have to introduce or to read some of your comments right here live on air. And of course, the beauty of it is that you can have your name mentioned on air. Well, time now to get serious and get deep into the conversation tonight. Well, I want to introduce the guest, as I said. We have on my extreme left, Habil Olaka. He's the CEO of Kenya Bankers Association, an organization that brings together all the 40-plus banks, commercial banks in this country. It's a critical entity because they control the credit market in this country. Well, he's joining us tonight to help us put pieces together and try to understand how we can price our credit better, and of course how we can make the process of loan application friendly in this country. Well, welcome Habil, and thank you very much indeed for joining us tonight. And next to Habil Olaka, we have Whitney Micheni. She has been with us since we started this program. Thank you very much indeed, Whitney, for joining us. And as you know, Whitney Micheni is a political economist. Asante for your time. And finally, on my immediate left, we have David Tayo. He's a career banker. That is not David Tayo. Yes, that is David Tayo for you. He's a career banker, entrepreneur, and consultant on matters SMEs, as well as the banking industry. He's a man that comes with tremendous experience in the banking industry, having been around the banking sector for more than 17 years. He has worked with some of the major commercial banks in the country, including Guarantee Bank, Bank of Africa, Chase Bank, among many other institutions. And of course, he has also worked with the SMEP microfinance, and that tells you that he is on this set with tremendous amount of experience and of course insight on matters banking. And I want to start with Habil Olaka. How do you when you look at the Kenya banking industry, what conclusions do you make currently?
Yeah, thank you very much, O'Brien. I think looking at the banking sector as we are today, we have got headwinds, but there's a lot of hope. In terms of the fact that we know that we are going through a very challenging period in our economy. But I think banks are fairly well placed to be able to support the economy, walk through that difficult path. One is that banks currently in Kenya, we are lucky because we are well capitalized. Banks are operating well above the regulatory threshold in terms of capitalization. And as you know, when banks are well capitalized, then they can be able to withstand shocks in the market. We are also operating from a point of the fact that banks are also fairly liquid. They have got adequate liquidity to be able to support. So they are operating well again above the regulatory thresholds. If you look at it either from their liquidity position or in terms of the other parameters that do measure the liquidity position of banks, I think they're operating from a fairly comfortable position. So my assessment would be that we have got headwinds ahead, but I think we are fairly well placed to be able to support the economy.
Mm-hmm. Very good. Whitney, how do you describe the current banking industry in Kenya?
Thank you, O'Brien, for having me, and a good evening to your viewers. How I would describe the banking sector in Kenya is coming from an MSME's standpoint. I would say the first thing we have to ask is what is the cost of credit? That's the first question I would ask, and how is the bank supporting the private sector? So when we come to the conventional banks, I would say that from an MSME's standpoint, the bureaucracy to access credit is still a bit too much. Mm-hmm. There's a lot of back and forth going on with banks, and the bureaucracy is still a bit much. And also the banks, even though you bring your credit history and you bring your the previous statements from your banks, they're not using that as collateral, meaning they're still asking clients for physical collateral. And you know that is a very big challenge for MSMEs and also the youth who are trying to access capital in banks. So I would say the banks, they're very profitable in Kenya. We normally see their profit margins which are very high. But I would say in supporting the economy, meaning the MSMEs part of the economy which employs 80% of the labor force of Kenyans, I would say that is still up for improvement in my view. Mm-hmm. Yes.
And of course, we'll be coming back to you with more insight. And I want now to hear from Tayo. Having worked in the banking industry for more than 17 years and still having a lot of interactions with this sector, is the banking industry friendly to Kenyans?
Thank you, Brian and KBC, for having me. I would say yes, it is friendly. And I'm saying that because for a long time, the predominant source of credit to the business community has been the banking industry. And with the onset of technology, the coming in of M-Pesa and what it did to the industry, the expectation was from other quarters that there will be stiff resistance and anti-competitive behavior from the banking industry. But the opposite actually happened. The banks were very accommodative. Mm-hmm. In fact, today they are the biggest agents of M-Pesa. If you go to any banking hall, you'll find M-Pesa agency and all that. Then came the digital lending. Before the digital lending phenomena happened to Kenya, then came the SACCO industry. And the bankers really supported the SACCO industry. And the biggest thing, and I think Dr. Habil will clarify that, was the provision of clearing services to SACCOs. In a very nice way to really absorb more players. Mm-hmm. Then came the digital lenders. They needed settlement accounts. They needed trust accounts to, do the settlement when they are disbursing their credit. And banks still supported that. So what I'm saying is banks, and let me just open it up to the whole financial intermediation sector, has taken a center stage. To the extent that we are seeing government coming in mm-hmm. to add, liquidity into the whole ecosystem through the affirmative funds, and that started way back. It even started, way back with the Youth Enterprise Fund, the Women Enterprise Fund, the Uwezo Fund, and now we have the Hustler Fund. And the regulator has also been supportive in allowing innovations to happen. So the industry is taking center stage in matters economic growth in this country.
Very good.
Yeah.
And I like the fact that you have brought in the issue of the affirmative funds by the government. And the government should not be in the business of lending. They're supposed to be in the business of creating regulatory as well as policy frameworks that ensure that the lenders thrive. But the reason why the government has taken up upon itself to try and see, to get into this space is because, number one, lending to SMEs or startups in this country is a very hard assignment, especially for commercial banks. Yeah. And number two, credit pricing in this country or the cost of credit in this country is very high. And it ranges from 13, 14, even sometimes, SMEs, they access loan at a cost of about 25%, in some institutions. And this is where I want to bring Habil Olaka. When you look at the current credit pricing mechanism that is in place and all the factors considered, do you think the banks are fair to Kenyans or to borrowers?
Oh, Brian, that's a tough question.
It's not tough because you're a banker, you represent the banks.
Yes, but I think we need to look at the evolution as well, the history. Mm-hmm. You remember there was a time when we had a law that was passed in this country to try to control the interest rates and the effects that it had. That was the interest capping law. Mm-hmm. It was put in place in 2016. It was repealed in 2019. And it was repealed because it was found not to have been effective. In fact, it was achieving the exact opposite of what it was meant to achieve. In other words, there was credit rationing, and the most affected segment of the borrowing market was actually the SMEs and that segment. Now, and I think we first of all need to sort of understand how do banks price their the facilities. Mm-hmm. There are a number of factors that need to be considered. Just like any other business, the first thing you do is to cover your costs, mm-hmm. and then you also include some profit for the shareholder, because the shareholder is putting his funds at risk, and therefore he needs a fair return for that. Now, if you look at the cost that banks include in the pricing for the loan, mm-hmm. would first of all to start with will be the cost of funds. Because what banks do, they do financial intermediation. They get deposits from those who have got excess liquidity and then pass it on to those who need the liquidity. And that intermediation, they do it as a business and they make some profit on it. So the costs that they have, the major element of that cost is the cost of deposits. And then onto that, there is also the normal running costs of the business. There's electricity, salaries.
And even before you proceed, and sorry for stepping on your shoes, this is what we call interbank lending.
No, I was talking about the normal lending to a customer.
Or to a customer.
You get deposits.
Bank lending.
Yeah, you get deposits, mm-hmm. and it's those deposits that you use for lending to the customer. Mm-hmm. Now, those deposits cost you money. You have to pay the depositor some money. You'll either raise deposits or you'll go into the capital markets and raise a bond, which will cost you money. All that portfolio of funding that you use for lending to the customer, you have got to price it as part of the cost of funding the borrowing. Now, then on top of that, you've got your own administrative overheads. Running the business, salaries, electricity, maintenance of buildings, putting in place the necessary infrastructure, all that will cost you. Security, so you put an administrative overhead on that loan on top of the cost of a deposit. Mm-hmm. Now, on top of that, there is always the possibility that when that money leaves your door, it may never come back. That possibility that it may never come back, you've got to price it. Because of the fact that the depositor, on the other hand, will not be told that, by the way, your deposit was lent to somebody who did not pay back, and so I cannot pay you back the deposit. The deposit is payable back on demand. So because of that possibility of the money not coming back, you add on a risk margin. And then the fact that the shareholders have put money into this business.
This is what you call the credit insurance.
That is the credit risk margin that you add on.
Which is about 1%?
Well, the credit risk is another issue that we can discuss, because there is a whole framework that has been put in place, driven by central bank, to ensure that there is an element of matching the risk to that risk margin. So then on top of that, there's also an element of profit, which a shareholder has put in money into the bank, he expects some fair return. So what I was trying to show is the various elements that go into pricing a loan from the borrower perspective. So there is cost of funding, there's administrative overhead, there is a credit risk margin, and there's an element of profit on that.
And there's also the element of taxes.
Well, you know, taxes will be part of the profit on which you are taxed. So the element of profit is what you pay for the tax bit of it.
Very good.
Yeah.
And I like the fact that you know, you have tried to unbridle, you know, what goes into, what aspects, you know, are thrown into the pricing mechanisms. But when you look at the banking industry, and I was going through the statistics by the Central Bank of Kenya, in the last 11 months of the year 2022, you know, banks had made a profit of about 280 billion shillings. If I still have the figures right, 280 billion shillings. And you have about 43 banks in Kenya. And so if you have to divide this profit amongst the 42 banks, you definitely see that banks in Kenya are making healthy returns. Whitney, from where you start, or from where you sit, is it fair for commercial banks to be making this kind of profit at a time when so many people do not qualify for credit in this country?
Thank you, O'Brien. Okay, first we will do a comparative analysis on major countries, maybe like even the USA, where we see that interest rates are very low compared to the interest rates in Kenya, meaning the banks in Kenya are making supernormal profits. And coming from the MSME standpoint, we can see that they're still not lending the MSMEs because they view SMEs as being too risky. The banks are risk averse, meaning that they prefer loaning the government money, investing in government securities, rather than, you know, supporting the majority of Kenyans who literally are in the MSMEs sector. So I think that the banks are just solely focused on loaning the government money, but not necessarily supporting the major part of the economy. They're still taking a very cautionary approach to how they deal with MSMEs by, you know, demanding collateral, really just like really pinning them down to high interest rates, which now the SMEs can't afford. Yes.
That's what you believe. And I want to correct my statement. It's not 284, but about 234 billion shillings. That is the profit that banks made in Kenya in the last 11 months. I'm yet to get the final numbers, or the numbers for the full year 2022. We should be coming back to Tayo, and I want to find out from Tayo. This is a question that you're going to respond once we come back from the break. Are SMEs in Kenya as risky as they are profiled by commercial lenders? That is what I want you to respond to, because I know you're in that space. Well, if you just joined us, you're watching the Scorecard. We are live from Broadcasting House, and our conversation tonight revolves around the cost of credit in Kenya. You know, the hula baloo that has permeated within the banking industry in Kenya, where banks have been accused of engaging in predatory lending by borrowers. And the question that we have tonight for you is the loan application process in Kenya friendly? That is the question that we're asking you tonight. We have the question on the screen. Is the loan application process in Kenya friendly? Our Twitter handle is at KBC Channel 1. At O'Brien Kimani is my Twitter handle. IG or Instagram is KBC Channel 1. And Facebook is KBC Channel 1 TV. We are taking a short break, and thereafter we shall be going to the streets to listen to Kenyans and what they have to say about the loan application process in Kenya. You're watching The Scorecard.
Nafasi yako ya kuwa mdosi wako. Jiunge na washindi tufanye biashara. Kuwa mshindi. Mozart Bet.
It sure is ironic.
And that's not really what matters now, okay?
Of course it matters.
That really doesn't matter right now.
Go! This is an investigation, sir! Sir!
Where's the driver?
Calm down, sir!
Where's the female driver?
Wait, calm down, sir! Calm down! Sir, you can't come over there! Sir!
What happened just now? Was somebody hurt inside of that ambulance? It's all right. It's over, Mr. Bai. Are you okay?
Can't you do anything right? You took the wrong key. What if something bad had happened to you? What if you were hurt? I was worried.
Welcome back. You're watching The Scorecard live from Broadcasting House. And of course, tonight we are discussing the credit pricing in Kenya. And of course, I want to retake our question of the day. The question is the loan application process in Kenya friendly? That is the question that we have for you. Is the loan application process in Kenya friendly? Well, as I have given you all the communication channels, our Instagram page is KBC Channel 1, and Facebook page is KBC Channel 1 TV, as well as our Twitter handle, which is at KBC Channel 1. My own personal Twitter handle is at KBC Channel 1. Now we want to feed you with some interesting data on the credit pricing in this country, and because we want you to judge for yourself, as well as guided by our team of experts, whether credit pricing in this country is fair. Well, when you look at Kenya's credit uptick growth in 2016 or 2009, it was about 28%. It grew to 34% in 2016, and thereafter, remember, this is the time that regulations on pricing were introduced. In 2019, it grew to about 50.4%. In 2021, it was about 60 what percent? You know, the cost of credit is determined by a number of things. One of them is the credit insurance. This is a third-party fee required when you're taking out a personal loan. The credit insurance fee is typically less than 1% of the loan amount borrowed. So something else. The disbursement fee is when your loan is disbursed, some Kenyan banks will charge you a one-time upfront fee. That one is not set by the Central Bank of Kenya. It depends or it varies from one bank to the other. Then, of course, we have the monthly loan processing fee. Some lenders will, of course, charge you a monthly loan processing fee until the loan is paid off. And it is not uniform across the board, so it varies from one bank to the other. There is also the commitment fee, where some Kenyan lenders will charge you this fee in exchange for committing to lend to a borrower. And it is usually less than 1% of the outstanding balance. Something else is the excise duty. Yes, the government has to benefit or has to get some taxes out of your loan. And following the implementation of the Act, the Income Act, the excise duty on loan processing fees to lenders, 20% is deducted as part of the processing fee from the amount that's borrowed before disbursement. So those are some of the attributes that go into the pricing mechanism. Remember, we are live here. We have our team in the house, and of course our reporters were also on the ground, and I want to go to the field and listen to what Kenyans have to say in regard to the loan application process here in Kenya. Let's go to the streets.
In Kenya is very high, and the process is tedious. Because the first thing is to look for applications, either through the web, and that means you've got to go to a place where it's available, and then you ask for collaterals. And this is what fails most people, especially those who are on startups and the young people.
It has so many documentations. It has so many policies, so many contradictory, how do you call them, documentation. For instance, you are looking for a mortgage. You appear in person in a bank, and then you narrate whatever you want to and what you are intending to. But you are going to be informed that for you to acquire a given loan, you must pay at least 10% or 20%.
My honest opinion is that it is not, and I'm going to think in two ways. I have to put myself in the shoes of those who just want to begin a business, and I feel that it is not friendly, and that's why you're finding a lot of entrepreneurs, especially startups, would rather go to either venture capitalists or they will go to loan sharks to be able to get money where there is less of an interest rate, so it's a lower interest rate that they can be able to handle. Also more flexible in terms of their payment plans, etc. But currently I think the banking industry has not been friendly when it comes to loans, because the collaterals that they require to be able to leverage on the loans that they're providing cannot be able to answer to the many young people who want to start businesses.
Kuna apps mingi za hizi digital loans, but unapata information yenye wanatumia ku advertise nayo in real sense si yenye wanafuata. Kama unapata maybe at their interest is a bit lower, but in real sense ukienda ku apply loan unapata si vile walikuwa na advertise.
Some of us, you see, you are so stressed when you are processing the loans that you don't read the terms and conditions well. So they tell you, they ask you, will you allow us to access your contacts? You see, you just say yes. And then after you've taken the loan, kumbe is a way of, they call even the dead.
The loan process in Kenya is a bit shambolic. Yes, because the loan recovery process is not discreet at all, and it's kind of infringe on the rights of the privacy rights of the borrower. So yeah, it should be looked into.
And what can be done is maybe to enhance the confidentiality and the data protection in terms of the phone numbers and even the ID numbers that we give out when applying for these loans.
Well, those are Kenyans. They are, of course, with their sentiments when it comes to the loan application process. We'll be going back to, I would want to hear the reaction from Habil Olaka. But before we go there, I wanted to find out from Tawo, are Kenyan SMEs as risky as profiled by commercial lenders?
When you're looking at the risk profile of a borrower, you look at it in two ways. One, you look at the borrower themselves, and there you measure mostly on their history and character. I would say most people score well at that level. But the most important risk that institutions will look at is what you want to call the counterparty risk. Mm-hmm. What are you going to do with these funds? And, you know, by SME, we mean somebody's in business. So which business are you engaged in? And how is it performing? And will the money come back? Right now, if you are in certain sectors, you know, you may not get a lot of grace from the banking industry. And, you know, it's out there. I think the writing is on the wall, and I'm just reading what is on the wall. Mm-hmm. If you get a tender from a county government and you walk to any financier to get funding to perform, chances are it will not be an easy climb. And it's all because of the pending bills. Mm-hmm. So you could be good as an SME. You will perform. Your character is good. You have a history of repaying all your loans. But just because that reason of borrowing exposes you to a counterparty who is risky, then you may not get that particular funding. So SMEs are risky, but where there's risk, there's return. We cannot have a blanket condemnation to the banks for not supporting the SMEs. We have very good stories about SMEs who have been supported. And the secret is for you to start a relationship with a bank before you need the money, so that the application process is easy. If you walk into a bank and the first thing you're asking for is a loan, of course you'll be given forms to fill, first to open the account. Mm-hmm. They want to know who you are. But if they already knew who you are and you're already banking there, whatever small shillings, whatever you are getting, before then you need the loan, then all these requirements will just be, you'll be ticking a box, because it's about, if it's about your 6-month statement, you have an account there, so you won't need to provide. Mm-hmm. Your KYC, they know your customer things, which are very important because they touch on, you know, anti-money laundering, what are you going to do with the money and those kind of things. All those details are already with your bank. What happens with Kenyans is we are excited about flashy institutions without looking at if these institutions will support me when I want to grow. So that's what I would want to sensitize Kenyans, that please look at banks. They talk a lot about what they can do and what they do. Look at the customers who walk into that banking hall and go where you belong.
You go where you belong.
Go where you belong. Mm-hmm. Because if you go to a predominantly corporate bank and you're an SME, mm-hmm. or you are a corporate and you go to a predominantly retail banking institution, then you see there's a mismatch. Mm-hmm. Money is money, but how it is given, you know, the risk acceptance criteria.
So what you're saying is that,
policies,
a customer is a customer before you even engage a bank, first of all, you need to do a background check on this bank.
Yes.
Is it an SME bank?
Yes.
Is it a retail-oriented bank?
Perfect.
Or is it a corporate bank?
Perfect.
Very good. And the most sad part is that, 80% of all businesses in Kenya are SME.
Yes.
And so if banks are not willing or they are shy when it comes to lending to SMEs, then we definitely have a major impact on the state of businesses in this country.
I would say largely customers around there going into square holes. Mm-hmm. If you're walking into a bank and you just ask, what kind of lending do you do? You'll immediately be given, and chances are you'll even see it in the posters
so
inside
it is
the
information
bank.
That is available.
Yes, it's available.
Very well.
So please go where you belong. Mm-hmm. If you're in agriculture, look for a bank which is, agricultural friendly, and chances are they will even have funds to support agriculture.
Very well.
Yeah.
Habil, I mean, you definitely had, Kenyans in the street. They were not very kind to your members. When you look at the credit, the cost of credit in this country, and I'm talking so more from the SME's perspective, is there something that can be done to, number one, lower the cost of credit to a single digit? And number two, is there anything that we can do to shorten the waiting duration, or the time it takes for you by the time you apply for a loan, the documents that are needed to the time the loan is issued, which is on average about 2 weeks for an ordinary SME?
Yes, that's a very loaded question, O'Brien, but let me attempt. I think the first question you had was on the interest rate in terms of is there anything that can be done to bring the interest rate down? I would put it in two ways: something that is being done and what more can be done. In my opening remarks, I mentioned how the interest rate is built up in terms of the components that build into the interest rate. Mm-hmm. And one way of bringing the interest rate down is by looking at each of the components and what we can do on each of the components to bring them down. So if we start, for example, with the cost of funds, which was the main item there. Mm-hmm. The cost of funds, of course, is driven by macroeconomic developments in the economy, the monetary policy direction that is taken by the central bank. Mm-hmm. When the central bank rate is going up, what they call the tightening stance, it means that the signal to the market is for the rates to go up. So depositors demand more from the bank, and therefore the bank will automatically also transfer that cost to the borrower by the interest rates going down. So one of the things is macroeconomic stability. When there is macroeconomic stability, then the central bank then starts adopting what they call the accommodative stance, where the central bank rate is coming down, and so the rates in the market come down. So the cost of funds, the banks also go down, and therefore the cost to the borrower.
And now it is currently pegged at 9.5?
It is, yes. 9. That was the last revision that was
in November.
That was done I think it was done in January.
In January?
Yeah.
9.5%.
Yes. So that's the central bank rate, which drives the rates in the market. Mm. So the banks sort of respond to that signal in terms of setting the price that they lend. Then the next thing I mentioned about was the administrative overhead. Administrative overhead, the cost of doing business generally in the market, and it's not just affecting banks, it's affecting all businesses. So when the cost of doing business comes down, also the banks transmit that to the lending. So it then needs to come down. Then we mentioned about the credit risk. The credit risk, this is the fact that there is a likelihood of the fact that when the money goes out, it may never come down, and you price that into the price. Now, there are a number of things that are being done to bring that credit risk down, and one of the key ones that I would like to mention is the sharing of credit information, which Davis alluded to through what you call the CRB mechanism, the CIS framework. And by sharing this information, then banks are able to assess the probability that the loan will default and therefore price it accordingly. So when they are able to assess that by having full information, they bring the price down and therefore transmit it to the borrower. Now then, of course, finally, the issue is the element of profit. And the element of profit is normally determined by competitive forces in the market. You see, so when the competition is fierce, the element of the profit that is loaded onto it is minimized. But also, there have been also mechanisms in the market to try to ensure that banks do not overload the profit onto the pricing. And for example, we have got the pricing models that now have got to be approved by the central bank before a bank can be able to put it into the mechanism into place. And so far we have had some good response from the banks, in the sense that out of the 38 banks, 27 have so far received approval from the central bank. Only 11 are yet to receive, and they're at a fairly advanced stage of getting that approval. So that in a way will be managed. Now to your question, how can that come down? One of the things that also is taken into consideration is the fact that quite a bit of the administrative overhead by the banks is actually the judicial process, the litigation process, either trying to recover the collaterals or something. Now, there is a process in the judiciary where instead of going for litigation, we are now trying to push for mediation as an alternative, what we call the alternative dispute resolution mechanism that is being pushed through the judiciary. Unfortunately, the judiciary itself is very supportive. That Madam CJ has actually is hosting a mediation conference next month that is going to highlight the importance of mediation in the banking sector disputes. So something is being done. On the collateral side, by the way, which I think is also critical, we saw a comment from one of the public who was commenting in the previous clip, where they are complaining about the fact that most of these SMEs don't have collateral that banks are asking for. That we agree is true, and the traditional collateral that banks have asked for, it puts into, it disfavors some specific borrowers, the youth, the women, the people with living with disabilities, the MSMEs that don't have the collateral. But we now have what we call the movable assets collateral registry, where a borrower can use any other asset that is possible to be collateralized, including agricultural assets. So, for example, if you're in agriculture and you've got the normal assets, the crop or a livestock, you can now use it as part of your collateral in order to secure a borrowing from a bank. An SME can use its furniture, equipment, the computers, and all that for purposes of securing a borrowing from a financial institution. So I think there are a number of things that are being done to address each of those components that you mentioned that build up into the cost of borrowing, that will eventually start bringing down the cost of borrowing to the consumer, and especially the MSMEs, because they have got some specific challenges, like as you mentioned, collateral. They may not have access to collateral. Information, they don't have as well organized information that's accessible to the lender as well as the other bigger corporates do have. But then there is the information sharing mechanism where they can then be able to start building up their information base. Maybe finally, I would just like to mention an initiative that we have at the KBA. We call it the Inuka Enterprise Development Program. This is a program that is meant to be capacity building the SMEs in order to be able to be ready to borrow from the commercial banks. And this is something that we have been doing for quite some bit of time, and therefore it's quite an appropriate avenue.
Whitney, when you listen to Habil and Olaka, what the banks are doing and what the government is doing, do you feel enough is being done to lower the cost of credit in Kenya?
Thank you, O'Brien. I think most of, for the past couple of years, I think most of it has been talk. We've not seen much implementation from either party, be it the government or actually the banking sectors. Because when we look at SMEs, most of the people who still fund SMEs is probably borrowing my family a loan or my own personal savings, or I call in like a crowd fund, or the more preferable one, which is not other than the conventional banks, is the banking systems, meaning like the SACCOs, right? And also now for the micro enterprises, they're going for the digital lenders, meaning I think people have literally like abandoned the banks because they've seen that most of it is just, a lot of talk and not much implementation, because now what we've seen that the banks have a high appetite in government securities and not in SMEs or personal loans. Yes.
Isn't it then? Because what you're saying is very true. Most commercial lenders would prefer to lend to the government because of the risk profile of government papers, which is almost nearly zero, as opposed to lending to an SME whose risk profile is almost 60%. So then as a government, so what is the role of government in ensuring that it doesn't crowd out the private sector in the credit market?
Okay, of course it depends on the Treasury and also the cabinet, which is being led by the president, where they can deliberately decide that they will not borrow as much from the domestic markets. They'll probably borrow much from the external markets, but this is not the case as we are talking, because we've seen that recently 400 and in the review of the budget, 496 billion will be borrowed from the domestic market and 196 billion will be borrowed in the external markets, meaning it's going to crowd out the private sector. So that's one of the things that the government can deliberately decide on, that they will not crowd out the private sector by borrowing in domestic markets. So yeah, that's one singular thing that the government can.
Tao, what would happen if the government was to opt to borrow more from the international market as opposed to the domestic market? That is, of course, going to release more money to be lent to the SMEs, right?
Yes, but we should never forget there are other hidden costs when you talk about credit. And when you borrow internationally, that means you're borrowing in foreign currency. So the element of appreciation or depreciation of the currency comes in as a big consideration. You would think that if you borrow in dollars, the interest rate is at 6%. But I want us to go down memory lane and remember what happened to Portland Cement, I think, when they took a yen facility. Yeah. And it ended up being very expensive. Right now, the jury is still out there, but we are finding ourselves as a country where the private sector needs foreign exchange to import raw material. Government agencies and the government itself needs the same foreign exchange to pay maturing obligations out there. So it's a careful balancing act. But just to look at it, the government really has tried to address the segments of the market, the SMEs that are being left out. And if you look at what the regulator, the central bank, did, even way before, was to create a framework for microfinance banks. And if you look at the names of these microfinance banks, you'll actually see they're being encouraged to look at niche markets which may not be serviced very well by the commercial banks. In addition to that, when the government mops out this liquidity from the market, it channels some of that money to the SMEs through the affirmative funds, which we mentioned earlier on. And just to go to the numbers, the plan around the financial inclusion fund, the Hustler Fund, the so-called Hustler Fund, is to set aside 50 billion on an annual basis for the next 5 years. Yeah. That adds up to, a kitty of 250 billion. So just to give you the magnitude of that fund, all the microfinance banks in Kenya have lent about 44 billion. So in just 1 year, the government has matched what has been done by the private sector to support the SMEs. And they're going to do that 5 times in the next coming years. Yes. So there's a lot that is being done. The Inuka thing that has been mentioned by Dr. Habil. So there's a lot that is being done by the providers of credit. So I think what needs to be done is a lot of education to the SMEs for them to create relationships with these lenders, for them to be able to access these funds. Maybe there's a failure there, but people are coming back to that realization that people need to be sensitized to know how to apply, where to apply, and those kind of things. And government has led in using digital frameworks to shorten and to make the application as easy and as painless as possible.
As it has become a culture on this show, whereby we scorecard processes and services. Habil, I want to hear from you. When you look at the process, the loan application process in Kenya, how do you rate it? If you know, in a count of 10, or let's say 5.
Where 5 is very good and 0 is very bad.
Yes.
I think I'll put it at about possibly 4, somewhere between 3.7 to 4.
Why?
Yeah, partly because of the fact that but this is very interesting. When you do a survey, and we have done a survey in terms of customer service. We just released the results about 3 or so weeks ago. What we do is that we send out a survey to the customers, and they give us response in terms of customer service from the banks themselves. And we, like last year, when we released the results, we ranked the banks. I mean, they were ranked by the customers, and so we just released the results. And some of the feedback is very interesting. Customers are not as annoyed with the banks as sometimes it would appear. Some of them are pretty happy with their banks because the banks have brought them from wherever they were to who they are today. And so when you ask about the application process, and I said is about 3.7 to 4%, is based on what I'm picking up from that feedback. Actually, it's interesting because some of the reasons why banks would require those processes is because banking as a business is very heavily regulated, and for a very good reason, because you are actually taking somebody's hard-earned cash and you are using that cash to lend to somebody. Now you have got to be sure that that money will come back. Otherwise, you will not have the money to pay back that customer. And that's why you have got to control that business. And that's why the regulation is so strict on the banks.
Yes.
So that's why banks also require these things to do with, for example, ensuring there is no money laundering being channeled through the process, that when that money goes away, it will actually come back. You are dealing with the right people, and also you are able to assess. There are a number of customers who come to borrow with the intention of not paying back.
Very well. Whitney, when you look at the loan application process in Kenya, how would you rate it?
I would rate it at a 2 out of 5.
2 out of 5?
Yes, because I do not believe that that the banks have. I think they just prejudice against the micro, small, and medium term enterprises, because they probably don't even have enough information that the loans that are being uptaken by the MSMEs will be non-performing loans. And also, I would like for me to rate them higher. I would want to see deliberate steps by probably giving a certain percentage of their loan books to actually go to SMEs. So far, we've not seen that. So that's why I still put it at a 2, because they're not deliberate in their actions to support SMEs in their loan books, as they're still very appetite for the government.
What about Tayo?
I would gravitate towards 3.5. 3.5. And I would say that because, as Dr. Habil has said, the number one duty of any bank CEO is to protect the deposits, not even generate profits for the shareholders. It's to protect the deposit. And the art of protecting those deposits has to find its way in, how you apportion credit, how you approve loans and all that. And that has to be inbuilt in the application process. And that's why, that rigor is there.
Very well. When it comes to the cost of credit in this country, how would you rate it?
On a scale of 0 to 5, in terms of affordability, or
in terms of affordability,
I think I would put it at about 3. And that is partly because of the fact that more often than not, you see, we compare ourselves to other markets. The US, it has been floated here. The US is, their lending rates are lower than Kenya, and why is it so? And there are very specific reasons why that's the case. Look at, for example, the inflation rate in the US and look at the inflation rate in Kenya, miles apart. Look at the Fed rate in the US and look at the central bank rate in Kenya, they're miles apart. And those differences filter into the costing of funding in Kenya.
What about
I would put it still at 2, because I feel like the interest rates are high, and also the non-interest charges, meaning the legal fees, the insurance fees, the taxes, I do feel that they account for a very large percent of the rates. So I would give it at a 2 because of the interest and interest charges and the non-interest charges.
Tavo?
Around 2.5.
2.5?
Yes.
You are gravitating towards
it's still high.
As well.
As an entrepreneur now, I feel what the cry is. The rates are a bit high, and I think even the players themselves agree that it's a bit high.
It's a bit high.
That's why they're pushing for the risk-based formula, where the credit history is taken up. They're pushing for something to be done on the counterparty risk. The government should start paying the pending bills to reduce the risk, and things will open up.
Very good.
Yeah.
Gentlemen and Alidi, thank you so very much indeed. And we do hope that, the policy makers and the policy implementers, are watching. And of course, they have taken into consideration, or they'll take into consideration your sentiments and try to see that, the lending rates in Kenya are brought down. But of course, we cannot overemphasize the importance of the banking industry in Kenya. They are an integral part of economic development in this country. Otherwise, thank you so very much indeed for your time with us tonight. Otherwise, asanteni sana. Well, you have been watching The Scorecard live from Broadcasting House, where tonight we are discussing the credit market in Kenya. And of course, you have heard it from the expert. My name is O'Brien Kimani. Until time is so well spent that I will not be able to sample some of your comments here. But thank you very much, and we do appreciate. Otherwise, thank you from me and the rest of the Scorecard team. Have yourself a good night. See you again on Tuesday. Bye for now.
Nimesahau kucheza Loto Moto. Usisahau kucheza Loto Moto. Shinda milioni 2 kila siku kwenye M-Pesa. Chagua lipa na M-Pesa. Paybill number 757070. Account number andika neno Loto. Kisha weka star na nambari yako ya simu. Weka kiwango chochote cha pesa kuanzia shilingi 50 hadi 2000.
Aulali.
Lipa kisha subiri draw. Welala. Nitakutimizia ndoto zako. Milioni 2 usiamini. Ujumbe huu umeidhinishwa na BCLB.
Sting. Uko sawa?
Siko sure niko ready.
Bravery is not the absence of fear, but action in the face of fear.
Amor.
HQ is ironic.
And that's not really what matters now, okay?
Of course it matters.
That really doesn't matter right now.
Go.
This is an investigation, sir. Sir.
Where's the driver?
Calm down, sir.
Where's the female driver?
Wait, calm down, sir. Calm down. Sir, you can't come over there. Sir.
What happened just now? Was somebody hurt inside of that ambulance? It's all right. It's over, Mr. Bai. Are you okay?
Can't you do anything right? You took the wrong key. What if something bad had happened to you? What if you were hurt? I was worried.